The 200-day moving average, the indicator that every finance channel, every trading book, and every CNBC segment treats like gospel. Price above the 200-day MA bull market, price below bear market. It is the single most referenced line in all of technical analysis. Today we test it. Bitcoin, 2019 to today, $10,000 starting capital. No cherry picking, full cycle. First, we pull the data and draw the line. The logic is simple. When Bitcoin closes above the 200-day average, you buy. When it closes below, you sell and sit in cash. That's it. No parameters, no complexity, just one line that half the internet watches every single day. Now the signals chart, and honestly, this looks reasonable. The 200 MA kept us in cash for most of 2019 early on. It caught the 2021 bull run. It kicked us out during the 2022 collapse. It got us back in during 2023. 29 signals over 6.8 years. The entries are messy in choppy markets, but the big moves look right. So the numbers, strategy final value, $60,973. Total return, 509%. Buy and hold final value, $72,674. Total return, 626%. Here's the interesting part. The 200-day MA actually has a higher Sharpe ratio than buy and hold, 0.7 versus 0.65. And the max drawdown is better, negative 64% versus negative 76. So the strategy took less risk. It just also made less money. Whether that trade-off is worth it depends on your stomach. Now, 3 problems. First, 29 trades over nearly 7 years. Same issue as always. The sample size tells you almost nothing statistically. You need hundreds of trades before you can call anything an edge. 29 is not hundreds. Second, the optimization chart, and this one is actually damning. The 50-day MA returned 1,792%, nearly 3 times the 200-day MA, which raises an obvious question. If we're going to use a moving average, why the 200? Because it is famous? That is the only reason. We tested the 200 because everyone talks about the 200. The data says the 50 worked better on this period, but we only know that because we looked at history first. In live trading, you do not get to make that choice in hindsight. Pick the 50 going forward, and it may completely fall apart. This is overfitting. The silent killer? Third, even the best version of this strategy, the 50-day MA, only beat buy and hold because Bitcoin happened to be in a historic bull market. A faster moving average on a trending asset will almost always look good in hindsight. Put it on a sideways market and it will chop you to pieces. So what is the takeaway? The 200-day moving average on Bitcoin returned 509%. Buy and hold returned 626%. The most talked about line in finance underperformed doing nothing by $117,000. The line is famous. The results are not. This is Quant Forge. We let the data decide. See you in the next one.